Good afternoon, everyone. I'm Piyush Bhandari, your accounts teacher. Today, I welcome all of you in accounts class. Accountancy subject is very interesting subject. It's a new subject for all of you. And this subject requires your commitment and regularity for doing well in this subject. Now let us briefly discuss the syllabus of accountancy. Accountancy subject carries 100 marks. This is divided in 3 parts. Part 1 has 2 units. The first unit is theoretical framework, which carries 12 marks. Second unit is of accounting process, which carries 40 marks. Part B also has 2 units. Unit 3 has financial statements of sole proprietorship, which carries 20 marks, and Unit 4, that is computers in accounting, carries 8 marks. The third part, which is Part C, is related to the project work, which carries 20 marks. And the book which has been prescribed for 11th class accountancy is T.S. Grewal's Double Entry Bookkeeping Financial Accounting by Sultan Chand, SCS. Please purchase the latest book of accountancy, because every year when the new edition comes, that edition has all the latest changes and the modifications incorporated in that new book. So now let us start chapter number 1, named Introduction to Accounting. And the focus of today's presentation will be on the need of accounting, meaning of accounting, features of accounting, and objectives of accounting. Now the first one is need of accounting. Before knowing what is accounting, let us know, is accounting required? Do we need accounting to study? If yes, why? What is the need of accounting? As you all know, that there are different kinds of activities which are undertaken by the people to earn money for their survival and for their livelihood. Some undertake profession, some go for service, some have their own occupations, and some have their business. Now business, what is business? Business is also an activity which consists of production or manufacturing and sale, or purchase and sale for earning profit. This profit is money. The business maybe of manufacturing kind, or the business may be trading kind. Means anyone can go for manufacturing business or trading business. In manufacturing, goods are manufactured, furniture is manufactured, garments are manufactured, anything is manufactured. And then after manufacturing, the goods are sold for earning money. Whereas in trading business, goods are directly purchased and then they are sold. What I mean to say, that in every business there are large number of business transactions. The new term here which has been used, that is transaction. Transaction is an activity which is expressed in monetary terms in business, which may be termed as economic event, an event which has some value in monetary terms. So in every business there are large number of business transactions and monetary transactions. So it becomes very difficult for a businessman to remember all the business transactions for a long time. And after a certain period of time, when the businessman wants to know how much profit has been incurred, how much profit has been earned, or whether profit has been earned or the loss has been incurred, whether the amount with which the business was started, whether that amount has been multiplied or not, what are the total expenditures which have been incurred, how much cost has been incurred. In this way, there are large number of transactions which are very difficult to be remembered by a businessman or owner or proprietor. So, in order to know some information about the finance, and that information which is reliable and authentic, is there any system, is there any method or a strategy or a way or a procedure or a process? Keeping all these in view, a system was originated that was called accounting. So now let us know the meaning of accounting. What is accounting? Accounting is a systematic process. Systematic means a system which is incorporated with certain rules and regulations, certain principles. System inherits in itself discipline, which is done according to certain norms, certain rules and regulations. So accounting is systematic process. What is a process? Process is called series of interrelated steps to do something. In process, different steps are there, different small activities are there, and all the steps and the activities, they are interrelated to each other. The second step has no relevance without first step. If the first activity has not been undertaken, then the second step cannot be taken. So accounting is a systematic process of identifying. Now identifying means recognizing, highlighting that certain economic events have taken place. It includes distinguish between various kinds of transactions. There are certain transactions which are of financial nature. There are other transactions which may not be of financial nature. Goods have been purchased by the manufacturer as furniture worth rupees 10,000. This is a transaction of financial nature. But if a quarrel has been taken between two employees working in the business, so this quarrel and a fight cannot be expressed in the monetary terms. Hence, this is called identification of financial transactions and events. That is called identification. So accounting is a systematic process of identifying. Second is measuring. Measuring means expressing in some denominator in terms of the currency. In India, it's rupees. So, measurement of transactions in monetary terms. Every activity, every event must be expressed in the monetary terms. It should be quantified in financial terms by using the monetary units. And then, after measuring, after ascertaining the monetary value and assigning the economic value to that activity, the next comes recording. Recording the transactions, writing the transactions. As the transactions are taking place the same way, in a very systematic way, in a very disciplined way, they are being written in the books. That is recording. Recording, writing the transaction in a book. That book is called journal. That is called the original book of entry. After that, classifying. In every business organization, there are large number of transactions. Number of time raw material is purchased in manufacturing business, furniture is purchased, stationery is purchased. After that, goods are sold. Number of expenditures are there. So, after a certain period of time, if businessman wants to know what is the total sales, how he will ascertain. So to find out the things in a prominent way, the transactions in a specific way, the classification comes. The classification means making the groups of the similar kinds of transaction. For example, all the sales, whether it's a cash sales or it's a credit sale, it is shown in the sales heading. All the purchase of goods, that will be shown in the purchase group. All salaries paid to the employees of the business, they will be shown under the heading of salaries. This is called classification. Next comes summarizing. After a certain period of time, every businessman wants to arrive at the conclusion of the business activities of the whole year in terms of profit and loss. That is, all the activities and transactions, especially the business financial transactions, they are put into a small summary to arrive at the result in terms of profit and loss. That is called summarizing. And then, after ascertaining the profit and loss, that result in monetary term is analyzed, that's studied in depth in order to find out that how in the future can the progress taken place in the business. What are the different areas which require more need of the businessman, of the manager to focus on, so that the profit could be maximized by reducing the cost of the production and by minimizing the expenditures. Hence, each and every transaction, item, group is analyzed with reference to improvement in the future. And whatever analysis has been undertaken, that is expressed in such a way which could be understood by the users in the business as well as outside the business. And lastly, communicating. Communicating means informing the result of the business to outsiders, to those parties who are interested in knowing the result in terms of profit and loss of the business. This is all done for the financial information. So this was the meaning of accounting. I repeat, the meaning of accounting. Accounting is a systematic process of identifying, measuring, recording, classifying, summarizing, analyzing, interpreting, and communicating the financial information to the users. Now we'll be doing the features of accounting. The first feature of accounting, whatever we have done, the meaning of accounting, on the basis of that, the features of accounting, they are, first one, identification of financial transactions and events. This involves how to differentiate between the different kinds of transactions or the financial activities. Those activities which are of financial character, which have an involvement of the finance or the money, they are identified as financial transactions. The second one is measuring the identified transactions. Those transactions which have been identified that they are monetary transactions, then their economic value is ascertained. Their economic value in terms of money has been ascertained. For recording, here one small thing is there, that before writing any transaction in the books, that recording must be supported by a proof, by an evidence, by a source document. Because if the owner goes in the market and purchases a table worth rupees 2000, and he comes back and tells his accountant that I have purchased a table, then the accountant will ask, where is the cash memo? And if the owner doesn't have the cash memo or any other document, if he has not paid in cash, if the businessman had purchased that table as a piece of furniture on credit, then there will be a document certifying that the furniture has been purchased on credit. If the owner doesn't have that document, accountant will not record it, because that transaction has not supported by an evidence. Hence, recording, that is writing the transaction in the books of account, takes place with an evidence that is called source document. Recording in the books of accounts takes place in one book which is called journal. In other words, it is called as original book of entry. Now in this book, all different kinds of transactions are recorded in a chronological order. Chronological order is that order in which the transactions have taken place. As soon as a piece of furniture has been purchased, with the support of the source document, it will be recorded in the journal. After that, if salaries have been paid, after 5 minutes the salaries have been paid, then salaries will be recorded. It is not the salaries have been paid just now, but the salaries will be recorded after 2 days. No. This is called chronological order. As the financial events take place, they are recorded immediately in the books of accounts, that is called original book of account, known as journal. Now after recording, registering the financial transactions in journal, from there they are posted to the different kinds of accounts, which is called classification. Another feature, that is classification or classifying. Now classification takes place in one book which is called ledger. Ledger is a principal book which consists of large number of accounts. Various accounts are created in different groups, and all the similar kind of transactions, after recorded in the journal, they are posted to the ledger in their respective accounts. And after that, the next comes summarizing. Now first took place recording, after that there was posting in principal book. Now there are large number of accounts, but if after certain period of time businessman wants to find out what was the profit and loss, in order to ascertain the net result of the business activities of the whole year, this comes summarizing. In summarizing, the classified data is put into a summary form, is summarized form, and here the first step of summarizing comes as trial balance. The balances of all the accounts, they are shown here, and after preparing trial balance, the main accounts are prepared which are called final accounts, the accounts which are prepared finally to ascertain profit and or loss of the business. Final accounts may be termed as the financial statements. There are two types of financial statements, income statement and position statement. As the term itself indicates, income statement, the statement which is prepared to determine income of the business as a net result of the business activities of a business organization, that is called income statement. Income statement may be termed as trading account and profit and loss account. From this, either profit or loss is ascertained, and there is one more statement which is called position statement. Position statement is the statement which depicts the financial position of the business organization in terms of assets and in terms of liabilities. Assets means what the business owns, OWNS, and liabilities, what a business is required to pay to the outsiders. This is called financial position of the business organization. So this comes in summarizing form. Now after summarizing, the next comes analyzing and interpretation. Whatever result has been ascertained in terms of profit or loss and financial position, that is studied in detail in order to convey the information to the users of the financial information. And lastly, communicating. Communicating is informing to the interested parties in the financial information of the business organization. Banks may be interested in knowing the financial position, in knowing profit or loss. Government is interested because the tax has to be paid to the government. In this way, there are a number of parties who are interested in knowing the financial information of the business organization. I hope this is clear to all of you. Now, let us take the purpose of accounting, the objectives of accounting. We say accounting is required. There is a need for accounting. So the question comes whether accounting as a process, as a system, has some or any objectives or a purpose in every business organization. So the answer comes positive. Yes, accounting has certain objectives to attain. Now the first one is maintaining accounting records. Maintaining accounting records, this is the first objective. Every business organization needs to record its financial information in a very systematic way, so that whenever any information is required, that information can be provided in a very authenticated way, and that financial information is taken as a reliable information. Second is ascertaining profit or loss. Another purpose of accounting is to ascertain profit or loss by preparing income statement. In income statement, trading account and profit and loss account is prepared. From trading account, gross profit or gross loss is ascertained, and from profit and loss account, net profit and net loss is ascertained. The next objective is to ascertain financial position, because every businessman wants to know what it has and what it owes to the outsiders, and that is determined by preparing one financial statement that is called position statement, and the synonym term for this is balance sheet. The next one is assisting management. Accounting to a great extent helps the managers who run the business in taking a number of decisions after providing the reliable financial information to them. And lastly, providing accounting information to the users. There are two types of users in every organization. One, internal users, another external users. Internal users are the ones who are within the business. For example, owners. Owner is the one who wants to know what is the profit and loss. If loss has been incurred, what are the reasons that in the future improvements can be taken place, and what are the opportunities to improve in the future. The next, management. Management consists of managers who manage the business. They are interested in knowing the expenditures. They are interested in knowing that whether expenditures are less or high. If they are high, what can be done to minimize and reduce the expenditures so that the cost will be less. When the cost will be less, the profit margin will be high. So the profit will be maximized. And the third party which is interested, the third users inside the business, employees. Employees are interested in knowing to what extent business is working efficiently, which is transmitting into maximization of the profit. Because if profit will be maximized, there will be more chances for all the employees to get more incentives and more facilities and so on. There are external users also. In external users, the bank, which generally give the finance to the business organization, creditors from whom the business purchase raw material goods on credit, then the government charges tax, imposes tax on the profit which is earned by the business organizations. So this was all about the objectives. Now, today I wind up my class here. Thank you.